Hello, my name is Mr. Dex, and this is the exclusive newsletter from Dex Investing. Today's news will have the following three main headlines. The stock market is experiencing steady growth. Major players in the technology industry such as Apple, Microsoft, Amazon, and energy sectors are maintaining their strong performance as stock prices continue to rise. JP Morgan stock launches a dividend race for investors with a dividend value of up to $1 per share. The U.S. economy is experiencing a slight decline in economic revenue compared to the annual rate of 2.3%. Inflation continues to rise. How will Biden address this issue? Now, let's move on to the first news headline. Today, the stock market saw an increase, with the S&P 500 index rising by 1%. The Dow Jones Industrial Average and Nasdaq Composite indexes also experienced gains of 0.5% and 1.5%, respectively. Notably, tech giants like Apple, Microsoft, and Amazon reported profits in the early part of the second quarter of 2023. Furthermore, energy sector stocks continued to rise, indicating robust growth in these industries and signaling positive prospects for the economy and investor sentiment. Recently, JP Morgan Chase, the world's leading private bank based in the United States, has initiated a dividend race, offering substantial dividend payouts to investors. JP Morgan, a leading global banking corporation, has recently announced an impressive dividend payout of up to $1 per share, along with a minimum guaranteed profit margin of no less than 14.18% for investors. As one of the well-established and renowned banks headquartered in the United States, JP Morgan is also recognized as one of the pioneers in integrating digital technology into customer experience, propelling the traditional banking sector into the era of digital banking in 2023. With solid financial reports and robust financial performance, JP Morgan is undoubtedly an attractive long-term investment opportunity that investors cannot afford to overlook. Recently, the U.S. economy reported a growth rate of 2.3% in Q1 2023, which is lower than the initial expectations set forth. Despite the annualized growth rate of the U.S. economy being 2.3% in the first quarter of 2023, slightly below expectations, the economy continues to show signs of gradual development. The unemployment rate has dropped to 3.6% in May, the lowest level since February 2020. However, inflation remains high, but is expected to begin decreasing in the coming months. The Federal Reserve is projected to raise interest rates 0.5% at its next meeting in July. Overall, the U.S. economy presents a mixed picture. While there are positive indicators such as a low unemployment rate and anticipated inflation reduction, the growth rate in the first quarter fell slightly short of expectations. The decision to raise interest rates by the Federal Reserve reflects a proactive approach to manage inflationary pressures. Monitoring future economic data will be crucial to assess the trajectory of growth and inflation in the upcoming period. That concludes the latest news, wrapping up today's international financial market updates. The question remains whether inflation will be effectively controlled and stabilized, and what approaches the U.S. will take to assess and provide solutions. Stay tuned for exclusive news from Dex Investing to continue following the numbers. Thank you.